Hello, everyone. Welcome to Adam's Stock Talk. It's April the 17th. It's Thursday. This week, it is the so-called Holy Week. So this week, we only have 4 trading days. Today, we have a mixed market. Dow Jones Industry lost 1.33%. Nasdaq lost 0.13%. S&P 500 gained 0.13%. Russell 2000 gained 0.92%. Energy and consumer staples performs the best. Energy sector gained 2.27%. Consumer staple gained 2.18%. But the healthcare and information lost. Healthcare lost 0.64%, and information technology lost 0.67%. For the week, the index is also mixed. Dow Jones Industry lost 1.14%. Nasdaq was down 0.62%. S&P 500 gained 0.28%. Russell 2000 increased 2.69%. It is also noted that the consumer staples and the real estate performed the best for the week. Consumer staples gained 3.47%, and the real estate gained 3.03%. But the communication service and the consumer discretionary suffered. Communication service dropped 5.93%, and the consumer discretionary dropped the most, 6.2%. Now let's look at the S&P 500 index. From the trading standpoint, I'm going to use SPY to directly reflect this index performance. From this daily chart, you can see that the lower high and the lower low patterns are very obviously. Personally, I think we are in a period of adjustment. I will be pay attention to the upside of this range, which is about 549, and the lower side of this range, which is about 489. So as long as it's oscillating between this range, the less we take actions, the better we get. But if it's breaks through the upside and stay there for 3 days, that reverse the trend. If it's break down this range, that indicating there truly is another leg down, which in that case, I would consider to further short the index. On February the 19th, we have hit the high of 613, and on April the 7th, we have hit the low of 481. If we see that total drop, it's almost 21%. We normally use 20% as the market is going into a bear market. Even though to stay at 481 is brief, but we need to be especially pay attention to this, because if it has another legs down, then we will be into the bear market. I would like to especially ask you to pay attention to this consumer confidence index. which is a leading indicator. So from January 2024 until now, you can see that it actually dropped below the previous lower point, which is on March 2024. So the leading indicator is going to wrong direction. Even though we haven't seen the inflation rate to really going up and out of the range, we haven't seen the unemployment rate is going out of the range. But normally the inflation rate and the unemployment rate, they are the lagging indicators. So the consumer confidence index gives us an early warning that we may heading into a recession. On individual stock, I just want to talk about one stock, which is Nvidia. I know Nvidia is AI darling, and a lot of people loves it. On Tuesday night, in a regulatory filing, Nvidia said that the U.S. government had informed the company that Nvidia need a special license requirement approved by the government to ship the H20 chips to China. Those chips was especially made for the Chinese market. Also, because of the U.S. government have concern that the Chinese is using the GPU unit for the AI technology. So the Nvidia's the application for the GPU shipment into China, the license application have never been granted. Its stock dives as a chip maker sees 5.5 billion hit from the surprise China chips control, and the stocks end up 6.87% down at the end of the day. Following Nvidia's footsteps, its major competitor, AMD, on Wednesday flags a 800 million hit from the new US curbs on chip export to China. Now let's look at the Nvidia's technicals. Let's first look at its monthly chart. On its monthly chart, we can see that 5 days moving average is crossing the 10 days moving average. If we look at the MACD, you see that there is a dead cross on the MACD. If you look at the RSI, it's no longer oversold. It's went into the normal range. Now, let's look at its weekly chart. On its weekly chart, we can see that it's 5 days, 10 days, 20 days. Those moving average, they are all going down, and they are in a bearish layout. Let's look at the MACD. See, the MACD actually went under the water, and RSI now is less than 50, which indicating that the bears are in control. We can also look at its daily chart. In its daily chart, we can see that the lower highs and the lower lows, the pattern is so obvious. All the moving average, except this, which is the 240 days moving average, also is the yearly moving average. All the moving average, they are in a downtrend. And on Wednesday, on here, see, it's a gap down, and then it's also closing down about 7% with increased volume. RSI just hit a dead cross on Tuesday, which is suggesting maybe another leg down is coming. To be honest with you, my assessment is that AI bubble is busted, and Noviden will have a hard time ahead. You may say that Noviden is different. It's the leading stock in this sector, which some people comparing it as the iron and steel in the 18th century. But I have a different view about this. If you look at this chart I created, all these companies are great companies in the 21st century. If you look at the Intel, which is the leader in the computer chips in the year 2000 tech bubbles, its price was at $75.83, about that highest price. And until today, it's never get recovered. Today's price is $23.90. If you look at the Cisco, which is at that time is the leading technology company for the internet platform, March, its price, year 2000, its price is $82. And today's, its price is $62. So it never get recovered. And if you look at GE, in year 2000, August, that's the highest price it reached is $289, about that. And until today, it's never get recovered on that price. Today's price is $204.50, about that. So all these three companies take already 25 years, and the price never get recovered once they go down. Then we can look at Qualcomm, which is at that time is the leading tech company for the wireless platform. In January year 2000, its price is at $100, and today's price is $155. But it takes 20 years until the July 2020, then it recovered its high in year 2000. And if you look at Microsoft, which is a computer software company, the leading computer software company, and in the year 2000 or December 1999, in that tech bubble, its price is $59.97. All those are adjusted, of course. And it takes 17 years. In the November 2016, its price get recovered. And the Oracle, if you look at it, in the tech bubble, year 2000, its price is 47, its highest price. And it takes 14 years until December 2014. Then it's get recovered. Of course, today's price is much higher, and the same is the Microsoft. But if you look at all those tech leaders, just like today's Noviden, at that time, people is also very enthusiastic about those companies. Just as today, people are very enthusiastic about the Noviden. On the average, it takes 21 years for those companies to recover to its highest price at the bubble. So my question is that, were you willing to take about 21 years to wait for the Nvidian to recover? That's all for this week. May our Lord Jesus Christ be with you and bless you. I will see you next week. Goodbye.